Good morning, everybody. Hope your evening went well. I was feeling a little puny yesterday, so I said, what the heck, I'm going to go boxing. So I went boxing and felt 100% better. It's amazing what stirring the blood up a little bit, making the muscles start to move, and running from your life from better boxers will do to your outlook on life. But anyway, sometimes you just got to get up and move, and that worked out well. So, good morning, Chuck. I wish all of you a very, very Merry Christmas. This is a special time of the year. It's when families get together. It's when you reground yourself in the values and mores and ethics that got you where you got, or where you are. So anyway, it's Christmas trading. The volumes are really, really way down. When I came in this morning at 5, we'd only done 17,000 in the E-mini, and I think we'd done 51,000 had traded in the notes. So the only item or event of interest today, probably in the financials, is going to be the 7-year auction. And I think at some point, the big boys, the primary dealers, will come in and support this market. Now, what we have right now is we have this infamous rundown in front of the day sessions opening, and quite often this can set the low. So I think there's one short in the market, but if we don't take out whatever the overnight sessions low is, we want to come back and trade from the long side in anticipation of a good auction for the 7-year today. The only news we have is jobless claims, 290. I don't think anybody pays attention to it anymore. I mean, it's just kind of the default number. It's what we have in the markets is that it's a one-sided market, the stock market, and good news rallies it, bad news rallies it. I mean, the market just goes up, and that's not healthy. You need a two-sided market, otherwise the volatility just disappears. And but that's where we are, and I imagine that's where we'll be at the end of the year. Goldman's projection for 2015 S&P was 20. We're so close to it, I wouldn't be surprised if we made that by the end of the year. Not today, but by the end of the year. So this is the news today. Only people that'll pay attention to this are the energy players. Like I said, jobless claims, I don't think anybody pays a hell of a lot of attention to. Then we have the 7-year auction. So the issue is, where can it take place? So just structurally right here, got a low volume number at 23.5. So we're going to make the buy 21.25 and 17 to 13. Okay, the first sell is going to be in this 30 area. I have a high up here of 2.5, so 30 to 2 will be sell 1, and then 7 to 11 will be sell 2. And like I said, given this rundown before the day sessions opening, we might be seeing the low put in right now. So not a lot to kick around and talk about this morning. It's going to be, my guess is, a pretty quiet session. Oh, you're going to have fun, Nancy, with a 10-year-old. Get your legs under you. But fun. Okay, looking at the 30-year, same situation. Let's run down in front of the news. So we're going to put our first buy 13 to 17. with a with a proper setup, and then 5 to 9. I just, when the market is headed lower, there's absolutely no incentive to be a buyer. So to move what paper they can move, they've got to stop the selling at some point during the day. 29, volume at 26, so 25, 29, sell 1. Basically leaning against 28, and then London's high was 07, so 3 to 7 will be sell 2. And we'll see what happens. The focus might be the direction of the mini. If it sells, we sure don't want to be short the financials. And looking at gold. I think we're probably going to see gold close today in the 75, 77 area. We wanted to sell 80s to 82s yesterday coming out. Wanted to buy it a little cheaper. So we'll sell 180 to 82. And our 84, 86, just leave it where it was yesterday. On the buy side, letting them get stops below the overnight session low, so 73.75 buy 1. And we got this volume down here in the 67, 68 area, so we'll make 60 for buy 2. I think the more comfortable trade is to the short side, but with Germany's banks closed, and there just isn't going to be a lot going on today. And New Yorkers are serious about their vacations, etc. So my guess is all the major players in gold are sidelined. Okay, the euro, Germany's closed. Euro's the biggest currency in the European basket. The mark is the biggest currency. And I think we're looking at a trading range. So last night we had the buy in the 40 to 50 area. They did not take it lower. They weren't able to break the overnight low. Excuse me, 21.75 to 85 was our number 2 buy last night. We got into that area and it held, retested just before the an hour after Asia opened up and traded. So here we are. So structurally, 29, 25, this spill right here. So this 20 to 30 area, I think is a pretty good sell. 40 to 50. But if there was ever a market not to trade, it's probably this one. Today, 75, 85 buy 1, and 50 to 60 buy 2. Okay, crude, we could get some action in crude today because this is actually a two-sided market, and I don't know when the Fed's going to come in and start buying crude oil contracts, but you know, this spreads. It's spread from the stock market to the financials. They manipulate the hell out of the gold market, and I mean, there's no thing. If things get bad enough in the oil patch, they won't come in and start to do that too. Not saying that they will. Don't think they will today. But you can see we got pretty good buying down here in the 55 area, 55 and a quarter. We're at 81. So stops below 50. Actually, let's just make it 55, 55 and a quarter. and then 54.50 to 75. On the sell side, 56 and a quarter, 56.50, and then 75 to 57 sell too. So a little lower today, but I don't think they'll break the market, and would really like to buy against 55. Ken E-mini, I think, you know, we've got that 2100 target that's close. That's probably a New Year's deal. The Dow closed over 18,000. That's the easiest contract to manipulate because there's only 30 stocks. And there was a headline out this morning talking about how consumer confidence is so high because of the stock market and the outlook for 2015. And that headline just sums up why the Fed's doing what they're doing. It's really the only bright spot in the economy. The economic news, when you get past the headlines, is decidedly less robust, less growth, anything. The numbers are being manipulated, but it doesn't matter. I mean, the market is going up because the Fed wants it to go up. So we've got a very, very clean break in the market at 75. Our first buy is 75, 77. 72. Okay, the easiest trade to see is sell failure to take out 82.85. And we could see that in the morning. The market runs up, it holds, take it back down before they rally it later, than 89 to 91. But I think the 2100 they're going to save for next Wednesday, if we're going to get there. So the news, jobless claims, I don't think it's a factor. I think there's a chance they run it down early in the session just to spook the week length. $75, $77 is a bit aggressive, but it is where support is. That's S1, and then 70, 72 is S2. Okay, take about 20 minutes to get everything up and posted. I'm going to get busy on that. Merry Christmas, Nancy, and I'll see you all as fast as I can later.